Good day, everyone. Welcome to the third live webinar session with Naveen's, discussing on home loans and tax savings. Our moderator for the evening is Ms. Thara Bojarajan, AGM Sales and CRM. She's been a part of Naveen's for 7 years now. Ms. Thara is a well organized individual who adopts a systematic approach and has the ability to effortlessly interact with people at all levels, ensuring the development of good business and healthy relationships. Ms. Thara is highly motivated herself and her team that are conscious of their part in improving productivity and quality through the business functions. Now over to you, Ms. Thara.
Thank you, Devrati. Good evening, ladies and gentlemen. It gives me immense pride and pleasure to welcome you all to another very important session on the Naveen's webinar series. During this COVID lockdown period, when the whole world has been drowned in utter despair, we at Naveen's saw this as an opportunity to disseminate knowledge and spread consumer awareness on a very important and relevant issues on the second most important dream of every one of our lives, buying a home. After all, as the aroma scholar Cicero said, there's no place more delightful than one's own fireplace. Powered and encouraged by the overwhelming success of the first two episodes, which were started with a flurry of queries, today we are conducting the third in line of the Naveen's Knowledge webinar series. And in this episode, we'll be addressing another very important topic, home loan offers and products, and how it's going to be the best tax saver for you. Naveen's, it's not a name, but a brand of trust and credibility, a brand of quality and promise upkeep. With more than 3 decades in real estate sector, with a humble beginning by Dr. Kumar, industry veteran who began his professional career with CMDA, who later on toiled with only determination as capital to establish brand Naveen's. Naveen's has cast a lasting footprint in Chennai, more particularly in residential landscape. With its 120 plus projects in prime locations, nesting over 2,500 happy families, Naveen's has created a bandwagon of niche clientele owing to its basic mantra, credibility. Our strategy and operations, fueled by our director, Mr. Navin, has paved way for best-in-class products and services. With our enviable quality, impeccable timelines, prompt and promise on project delivery, toasted with a panache portfolio in the glorious city of Namma Chennai, covering all prime and elite locations, starting from Madavaram in North Chennai to Medavakam in South Chennai, Porur in West, and Adaya to East, comprising of ready to occupy and rapidly getting ready to occupy phases. So that means our project comes with an extra edge of maximum savings with multiple benefits. Last but not the least, over 10 financial institutions, including the SBI, have approved all our projects for home loans, which is another testimony to our virtuous credentials. This again creates an absolute ease of platform for a buyer in getting his home loan sanctioned without any delay, where the valuation, verification of documents, and legal clearance for the project he is looking to invest is already done. With these brief words, I invite the two great speakers of the day, Sri Seenu Baskar and Sri Srinivasan J. Welcome, sirs. Sri Seenu Baskar, a senior official heading the sales team for SBI, has been in the real estate sector market for more than 5 years. Regional manager at Tambaram for 3 years, headed a loan processing center for Chennai, holds a master degree in marketing and business management with over 40 years of experience. The other distinguished speaker for the evening is Sri Srinivasan J, a chartered accountant. Been a part of tax controversy and dispute resolution, TCDR, team at PwC for about 15 months. Been a direct and indirect tax manager at RG Rajan Associates for about a year. Started own practice from January 2020, advising companies including MNCs and all GST matters, including GST implementation, transaction advisory, filing and review of returns, written opinions, credit review, refund related, and GST audit. Expertise in handling litigation related matters in direct and indirect tax laws. Expertise in handling transfer pricing cases and international taxation. Now, let me start with Sri Seenu Baskar from SBI Home. SBI, being the largest public sector, active in issuing home loans. And as we all know, it's one of the cheapest bank available in the market with lowest interest rates. Generally, a customer thinks once they finalize a property, they can straight away apply for a home loan and get it. Isn't that easy as what it sounds like in terms of the process? So, what are the key things and essential factors one should look into and be taken care of while planning to go for a home loan? Request the distinguished panel, Sri Seenu Baskar, to take over and explain the same. Over to you, sir.
Yeah. So I will divide my presentation into 4 parts. Firstly, I will try to explain the possible benefits under the income tax law for a person who is opting for a loan and buying a property. Secondly, of those benefits, generally some aspects of the income tax provisions are not 100% taken by the taxpayers. Based on my experience, I'll tell you what general points are missed by the taxpayers. And on the third part, consolidatedly, what could be the best possible tax optimization that a taxpayer can go for if he's considering purchasing a property. And lastly, after considering all these benefits, in terms of finance, if you're going to purchase a loan and there is some rate of interest, what is the reduced rate of interest after considering all these benefits that a taxpayer will be entitled to is what I'm going to discuss. So let us start with the part 1, where the benefits under the income tax law. I'll give you a brief about it. So if you look at the income tax law, let us start from section 24, so if you look at a loan product, there are 2 components in a loan. One is interest component, second is principal component. Under income tax law, there are different provisions for claiming of deduction for interest and different provision for claiming of deduction on principal. Let us start with interest, which is section 24. It predominantly says there are few conditions attached to claiming this deduction. One is you should necessarily own the property. So the property should be in your name. Second, for this property procurement, you should have borrowed capital. Thirdly, if at all you are paying any interest, a certificate to that extent has to be produced to the authorities. Lastly, they are dividing the entire acquisition of property into 2. One, those acquired property which will be used for your own residential purposes. Secondly, those acquired property which you will be letting out to a third person. If you are going to use it for your own purposes, the maximum deduction that a person can claim for a financial year is 2 lakhs. That is the interest component. If you are letting out the property which you have acquired, then there is no limit. You can claim any interest that you paid as deduction under section 24. So therefore, the first component of the loan, being interest, is eligible for deduction under section 24. The second component, being the principal, is eligible for deduction under section 80C. Again, the conditions that we saw in section 24 for interest almost remains the same. That is, property should be owned by the assessee. Second, you should have obtained a loan. Thirdly, certificate to be obtained for the interest payable. Only difference is the amount of deduction that you can claim. Where in section 24 we saw 2 lakhs for self-occupied and unlimited for let out property. There is no distinction between self-occupied or let out property under sections 80C. You can claim a maximum deduction of 1.5 lakhs per annum under 80C, right? So this is with respect to principal repayment in case of a housing loan. And there is also one more section called as 80EEA. This is for certain category of taxpayers, and this provision was introduced in the previous year, that is financial year 1920, which is being continued in financial year 2021 as well. I'll give you a brief about that provision as well. So this is to encourage those new buyers of home. One is, the first condition is you should not own any property as on the date of obtaining the loan. Second condition is you should use this particular property for your own purposes. And third condition is, very important condition, is the stamp duty value of the property acquired should not exceed 45 lakhs. If you are going to satisfy all these conditions over and above what you claimed as interest under section 24. So we saw that under section 24, there is some restriction on interest deduction. You can claim a maximum of only 2 lakhs. But under this section, over and above 2 lakhs, you can claim one more 1.5 lakhs under this ATEA as reduction on interest. So these are all broadly the sections under income tax law which provides benefits to the taxpayer. This apart, under other statutes, there are some benefit. I'll come to it little later. Now let us go to part 2. What taxpayers generally tend to miss out with respect to tax benefits. So to start with, let us analyze section 24. So predominantly most of the clients that I have seen are under the misconception that only those borrowings which are from a banking or a financial institution alone are eligible for deduction. Absolutely not. There is a distinction between section 80C and section 24. Just for the sake of repetition, I'm doing it. 24 is for interest, 80C is for principal. When it comes to interest, government says you can borrow from any institution. In fact, you can do a private borrowing as well. Even in that case, the interest that you pay will be allowed as deduction. This point many of the customers do not know. Therefore, I would request you to consider this point. Second, very, very critical point again, the deduction is not dependent upon your payment. That is, every month you are supposed to make some EMI, which comprises of interest and principal, right? Now, if at all you miss out on some months, even for that month, you can claim tax benefit because this section 24 uses the term payable, interest payable and not interest paid. Therefore, you have to be very, very careful, especially because of this COVID impact, you might have some financial issues. So therefore, even in that cases, when you are submitting the document to the employer, you can very well give the certificate of the bank of interest payable and still claim interest deduction under the income tax law. This generally people don't do. So these are some points which generally customers miss out under section 24, interest deduction. Coming to section 80C, one major point that everyone misses out is when you're purchasing a property, in addition to interest, principal, etc., you will also pay a stamp duty for registering your property and also some other incidental registration charges. Now, please understand that this is specifically provided as deduction under section 80C. So therefore, in addition to the principal repayment that you make, you can still claim your stamp duty or other registration charges under 80C. So therefore, please note down this point. When you are procuring a property, you can certainly claim this deduction as well. And one more point is unlike section 24, where interest payable itself is allowed as deduction, under 80C, only if you make the payment, deduction is allowed for principal payment. So therefore, that distinction is there. So you have to keep in mind. And borrowings wise, even LIC borrowings are being allowed under section 80C. It is not only your banks and financial institutions. Just as an adder, LIC also you can claim as deduction under 80C. So these are all some of the points which generally people miss out on claiming as deduction. Now, coming to the part 3, what in my view could be the best tax optimizing strategy, which generally people miss out. You see, what I have seen is generally whenever they go for a loan, they don't go for a joint loan and joint ownership. Now, let me take an example and tell you what is this I'm talking about. Let us say you are procuring a property and you are taking a loan of 60 lakh rupees. Your EMI will work out to around 8 lakhs, 8 point some lakhs approximately. Now, out of this 8 lakhs, your maximum deduction will be 2 lakhs. If it is a self-occupied property, 2 lakhs of interest and 1.5 lakhs of principal. So though you are making payment of 8 point something lakhs, you will be able to claim only 3.5 lakhs as net deduction. However, if you and your spouse together or your father or mother jointly procure a property wherein the ownership is divided into 50-50 or some other proportion depending on the facts, and you also add that person, your spouse or your father or mother, as a co-owner, what happens is normally you will claim only 3.5 lakhs. Now he can claim 3.5 lakhs separately. You can also claim 3.5 lakhs separately, assuming that the ownership is 50-50. This everybody misses, and the implication of it of missing out is around 1 to 1.5 lakhs per annum. Takes tax savings alone 1 to 1.5 lakhs you will be missing out if you are not going for this study. Therefore, whenever you go for a property, I would certainly suggest you to go for a joint property. After some point in time, you can transfer that property to yourself, or you can transfer to the other person. That doesn't matter. But at least in the initial period, I would suggest every taxpayer to go for co-ownership and joint loan. Right? So this is part 3. Now the last part, whatever I have discussed now in terms of numbers, I have given in Excel. What does that number say? I have incorporated these tax benefits and I have tried to compute the net interest that you will pay. Right? Let us go for that computation. Let me share that Excel with you. Right? I hope the screen is visible to everyone. Right? Now, before going into the computation part, I have assumed certain numbers. I have assumed the loan amount to be 60 lakhs. I have assumed the rate of interest to be 7.5%. It might vary very few percentage here and there based on the bank. And I have assumed the loan tenure to be 20 years. And of course, repayments in terms of year is 12 months. So therefore, if you compute the EMI will be 48,335 per month. If you go for total amount repayable, it will be 1.16 crores. Total amount of interest is 56 lakhs. Taking this amount as basis, I have tried to compute the tax savings on this, how the tax savings effectively turns into reduced rate of interest is what we are going to see. Right? Now, I'm not going into how the computation was made, and directly want to take you to some of the aspects of it. So what I have done is based on your slab. So broadly, there are 3 slabs, 2.5 to 5 lakhs, 5 to 10 lakhs, and more than 10 lakhs. Accordingly, tax rate will also differ. So what I have done is the first scenario, what I have tried to do is I have tried to take the tax savings on account of you procuring a house property, that I am dividing into 2. One, your house property is being used for your own purposes, that is self-occupied property. Second is let-out property. Let us see what if you invest in a self-occupied property, what is the effective rate of interest that you will pay. In our case, the rate of interest is 7.5%. After considering this ATC reduction will be so and so amount, which I have given here, and there will be section 24B, and there will also be total savings. So if you look at the effective EMI for the whole year, it is 5.62 lakhs. So effective EMI interest rate after considering the tax rate saving will be 7.1% if you are coming under this 5% category. It will be 5.87% if you are coming under 20% tax bracket. It will reduce to even more down to 5.01% if you are coming under 30% bracket. And if you are paying surcharge, there are 3 types of surcharges under income tax law. It will come down to 4.75%, 4.6%, and 4.35 and 4.02%, etc. So though you pay interest of 7.5% upfront, after considering the tax savings, this is the net interest after considering the savings you will pay. This is with respect to self-occupied property. When you come to let-out property, your savings will be even more because there is unlimited deduction for interest, right? So the computation probably I will share at the end of the session. So I have calculated it. If you look at the rate of interest after considering these deductions, it is 6.81% for 5% taxpayers. It is 4.6% for 20% taxpayers, and it is almost 3%, 2.99% for 30% taxpayers, and it reduces gradually for those who are paying surcharge. So therefore, those persons who are paying surcharge at the maximum will only pay 1% interest if they are going for a loan of, let us say, 60 lakh rupees. Effective rate is 1%. This is only considering the tax benefit under section ATC and section 24. right? Now I told you the best combination will be in case of taxes is joint loan, right? So there is a separate computation which I have given. What if you go for a joint loan? The benefit will be even more, right? I have done this computation. If you look at the interest percentage, if you go for a joint loan and if it's a self-occupied property, for a 5% category, it is coming down to 6.8% and it reduces to 4.84% and it further reduces to 3%, 2% and finally it comes down to 1.62 percentage if you're going for a joint property. And if the joint property is let out, then you'll get more reduction because interest is unlimited. So it is reducing even more, 6.4% for 5% taxpayers. For 20% category, it is 4 point some percent. And if it is 30% category, it comes down to 2% and it goes all the way to 1.03% if it's a jointly owned property, because both of them can claim interest deduction. This is second. Third one, I explained section 80 EEA. For those first time property buyers, I told there is a deduction available under the income tax law. If you consider that deduction independently, right? So if you're going for that scheme alone, and if you're a 5% tax bracket taxpayer, it will be 6.81 percentage. If you're a 20% payer, if it will be 4.6% and 3% and so on and so forth. And please mind you that I have not considered other benefits independently. If I'm considering this 80 EEA alone, I'm getting this much of benefit, right? This is third category. And the last category, in fact, there are two more categories. This is not the last category, last but one category. What if, so if once you procure a property, obviously you will stop paying your rent. Assuming that you were paying rent and you were in a rented property, now you have procured a property. Now what will be the rent that you paid was a loss previously. Now that loss is a savings for you. If I consider that saving, what is the effective rate of interest is what I have computed. That effective rate of interest comes significantly down to 5.59% in case of 5%, 3% in case of 20%, and it comes down to 2% and 1% in case of 30%, as the case may be based on the surcharge. And the last one I want to discuss is the Prime Minister Awas Yojana, which is a new scheme introduced by this government. Now, before going into the scheme, I just want to tell you some of the conditions that are applicable for this scheme. There are 3-4 conditions that I want to share. I'll just tell you, I don't want to share the screen, but I'll just tell you what are the conditions. The first one being the category is divided into two. One is your economically weaker section, middle income group, and lower income group. So if you look at approximately the total deduction comes to 2.3 lakhs to 2.67 lakhs at the maximum range. Depending on the eligibility criteria and what amount of loan you take, that amount varies. So what I have done is I have assumed a range of 2.3 lakhs as a benefit on this scheme, and I have computed the savings. Let me share the savings alone and complete the session. Right. So the savings, if I consider this Prime Minister scheme, will be net rate of interest that you will pay will be 5.35% in case of 5% tax bracket. It will come down to 3.57%. It will come down to 2.28% in case of 30% bracket, and it will end up with 1.2, 1.0% in case of the highest taxpayer. So therefore, and one more point is, I have not considered these things cumulatively. This will involve even more max. So we are effectively looking at some 1 to 3% effective rate of interest if one is able to effectively plan all this. And just for information, if at all you're going to let out your property after procuring it, the effective rate of interest will be negative, in which means that the interest that you pay will be in negative. That is, the rent that you receive will be more than that of the interest that you pay. I will just show the calculation. What if you receive the interest as well, right? Assuming that you receive 18,000 rupees per month interest after procuring this property and after letting out, we are now seeing an effective rate of interest of 1% in case of a category of 5%, and it comes down to minus 0.86% in case of 20%, and it goes down to minus 2.53 and minus 3, etc. The reason why it is negative is if you procure 60 lakhs loan, in case you let out that property, you will not even pay 60 lakhs. That is, you will not even pay the entire principal amount. The total amount that you will pay over the 20 years period will be less than that of 60 lakhs if you are renting out, and I have assumed a rent of 18,000 per month. So therefore, if one wants to procure a property, I would certainly suggest considering the tax benefits and also financial impact on account of the Prime Minister scheme and other financial impacts such as rent received, etc., and opportunity cost of rent paid, etc. The effective rate is certainly around 6 to 7 point rate reduction is what we are saying, and in some cases where we receive rent, it is even going for negative. So therefore, in the present scenario, considering the reduction in rate of interest, it almost seems like the best possible investment that one person can make considering other factors. So therefore, this is with respect to tax perspective, what could be your potential savings. Over to the moderator.
Thank you, Mr. Srinivasan. That's in fact a detailed explanation on the numerous tax benefits and the projected working on the amortization chart and effective rate chart. I'm sure this would enlighten the audience on the actual outflow. In fact, I was puzzled to know about the minus rate on the effective rate computation when you include the rentals, the PMA. In fact, government is giving us money to buy a home. That's indeed a great news for all the buyers out there. So yes, I think this would definitely help. An audience would be in a position to understand, how much they would be, how much of outflow they would be incurring, and as again the youth savings that would be benefited while buying a property. Thank you. We'll be, in fact, getting back to you with. I think there's already a lot of questions which has been posted by the audience. We'll get in touch with you shortly on this. Now moving over to Mr. Seenu Baskar. I think we just lost him in between. I just wanted to, welcome him to the session, and once again just introduce him since he was not live. Shri Seenu Baskar, a senior official heading the sales team for SBI, has been in the real estate sector market for more than 5 years. Regional manager at Tambaram for 3 years, headed loan processing center at Chennai, holds a master's degree in marketing and business management with over 40 years of experience. This SBI being the largest public sector and being active in issuing home loans, and we all know it's one of the cheapest bank available in the market and with lowest interest rates. We would like to know generally a customer thinks once they finalize a property, they can straight away apply for a home loan and get it. Is it that easy as what it sounds like in terms of processes? So what are the key things and essential factors one should look into and be taken care of while planning to go for a home loan, sir? Request you to kindly take over.
Madam, now I respond to your question. It is not so hard as you say. It's very easy to get loan from any bank, particularly State Bank of India. Before finalizing the loan, a person has to think how much you want to buy. What is his net monthly income? What is the loan amount he has to decide? What is the loan he proposed to have towards the total cost? These three things he has to decide before getting a loan. We give loan for all purposes. We give loan for purchase of a land. We give loan for construction of some property on the land. We give loan to buy a new flat, old flat, second-hand flat, take over from any other bank. We give top-up loan to meet any domestic expenses. If we give loan for doing interior, we give loan for even repair and renovation. So it is very simple to get any loan from any bank, particularly State Bank of India. Let me tell what are these types of loans. First of all, somebody wants to have a plot. They want to buy a plot. We call it as a realty loan. Somebody can buy a plot right now. He may decide to construct a house later. But there's a stipulation that anybody who wants to buy a plot, they should complete construction within 5 years. It's a stipulation there. Beyond that, they are supposed to pay higher interest. So we suggest people to complete the house construction within 5 years, and this loan can be repaid in 10 years. So anybody can plan for buying a land. We call it as a realty loan. It should be a mini. If we can go up to 15 crores, we can buy a land.
Sir, I just have a question. Now, if an individual is buying a property, say with us, Navin, as I already told you, we already have some 10 approved banker, banker panelists in our kitty. So likewise, for a customer, when he's buying a property, what are the, basic things like his eligibility criteria and documentation? What would be his loan amount and what would be his tenure and what would be the interest rates which is prevailing at the moment right now, because there's been a slash of interest rates which everyone is hearing. So, if you can just enlighten us on those lines, it would be of a great help.
Madam, since everybody is interested to know about interest, I am telling you, earlier all the banks used to connect this interest rate with base rate. Then they changed it to MCLR, marginal cost of funds, something like that. Now, all rates are linked to repo rate. First of all, I will tell about what is repo rate. Repo rate is the rate at which banks borrow from RBI. Now, all banks, they link the rates with the repo rate. State Bank of India is pioneer bank which links the rates with the repo rate. Right now, whenever we change in the repo rate, State Bank also changes the interest rate. So once in a quarter, our rate changes. And the people say, now we are having the lowest interest as of for the past 20 years. This is the lowest interest with which you now getting from the banks. Our rate starts right now from 7.35 for 30 lakhs loan, madam. It goes up to 7.70 for loans more than 75 lakhs. This is not interest. And whenever there is a change in the interest rate by the RBI, immediately the benefit will be passed to the customers without they are asking for. Secondly, you ask about what is eligibility for customer. Before I buy a plot or a land or a flat with Navin say, I should know how much I'll get it. For a person who wants like to have a 30 lakhs loan, he can get 90% of the property he can get as a loan. A person up to 75 lakhs, if he wants to go, he can get up to 80%. If a person wants to have more than 75 lakhs loan, he'll get more than 70% of the project he'll get as a loan. And there are so many other calculations are there, like NMI and EMI. What will be his income? Normally, bank takes income what we call net monthly income. What is net monthly income? Net monthly income is that my gross income of deducting all the statutory requirements, of deducting the existing EMIs. I already would have some other loan in some other bank. That EMI also I will take away. That will also add to my liability. Plus the proposed EMI for this loan all will be added to my gross. Then net my income is arrived at. So there's a ratio. It starts from 75 to 50%. It goes to for different segments. It depends upon that NMI and EMI loan is sanctioned. And regarding somebody wants to know about repayment. Now we can go up to 70 years repayment. Earlier it is not so. Now we can go up to 70 years repayment. A person can go. And if I am 7 years old, I can even go extend by another 5 more years by adding my son or a daughter who is having sufficient income to pay. I can go up to 70 years repayment now. That's the benefit now every bank is extending. So I told you about the eligibility. I told you about the repayment. I told you about the other things also. Now it is not so difficult to get a loan from the bank because they have to bring only 3 things for both salary and non-salary people. For salary people, they have to bring 3 months salary slip, 6 months bank statement, and 3 years ITR. That's all. Nothing more than that. For a salary person, only 3 years ITR.
Do we cater to NRI clients, sir? What do we have any special norms for NRIs?
I just cleared about what is the basic things of the banking. Now I'll go one by one, madam. I told you about a person can buy a loan for a purchase of a plot, PLOT plot. I said about realty loan. Then I told about housing loan. NRI also can go for housing loan. The separate scheme called NRI housing loan. It's also the interest rates are equal to the same of the housing loan only. If the person cannot come from the abroad, they can do research through the PIO.
Yes, got it, sir. What about the tenure? What is the right tenure one should go in for, sir, when he's taking a loan?
Madam, what I suggest normally, what people they will do miscalculation. They will decide 15 years repayment, but they suffer not able to pay EMI properly. So I suggest people, all the young person now, IT people who are now ready to buy property, because most of the people are doing work from home. They want to go for one more home because they want to have a separate room for their office office transactions. I suggest that they should have for maximum 30 years, madam. Because bank is charging interest only on the outstanding. So there is nothing linked with the tenure and the tenure. So I suggest people should have maximum tenure. They should take 30 years.
Okay. Can you just throw some light on the fixed and the floating interest rates, which is which we generally keep listening to people talk about. So what is fixed and what is floating interest rates?
Madam, with regard to State Bank of India, now we don't have any fixed rate. Just stop. We have only floating rate now. And I think almost all banks also stopped at the fixed rate. Even if they given the fixed rate also, there's some catches there. Within 2 years it becomes floating rate. In some banks within 3 years it becomes a floating rate, madam.
Okay. So it's generally you don't advise, or it's you say as per the norms it's not available.
I can't get you.
Generally you don't advise, or is as per the norms it's not available?
Madam, as a norm not available. As a norm it's not available right now.
Okay.
And going further, madam, I'll take a few more minutes. We have different products for different segments. Say for IT person. For IT person, we have called a product called a flexi loan. That means he'll get 20% more loan than the normal loan. He'll get 20% more eligibility on the loan than the normal loan for IT person. They should be of some age between 25 and 45 years. The catch point is this: in this that the EMI is not uniform. For initial period, it will be less. Even though they get 120% of the eligibility, they will pay only 36 months. They will pay only lesser EMI. They pay EMI at a later time. So it is fit for a IT person, because for a young person they may not have so much of a take-home pay. They may not get an incentive. For a senior, they may get these things more. So they can plan for this flexi loan, madam. And second, in addition to normal housing loan, we have a product called mass gain. That is the product bought out by State Bank of India first. Now other banks also follow. What is that? Suppose our MD of Navin, he purchased a flat somewhere in T Nagar. He has some sufficient income at his disposal. But normally people do pay only EMI. What is required by the bank only pay. But in this case, what I am saying, mass gain, any person, both salary and non-salary, the extra income what they have at their disposal, they can deposit into this account, the home loan account. To that extent, my interest liability goes down. So whenever I want take also, I can take back like a SB account, I can take back the money. Like a current account, I can take back. So I can reduce my income, my interest liability by using this product. It's called mass gain. Bank has bought it. I think that's one of the best products for the young entrepreneurs or the young IT people. They should think of the flexi loan and max gain.
That's an interesting information, sir. So what you say is that if you have a lump sum amount in our savings, you say that you can adjust it against the interest paid towards the home loan.
True.
Oh, very good. That's an interesting information. Talking about the IT people, you said you have flexi loan processes for IT people.
True. Yes.
Correct. Considering the current situation and the pandemic situation, what we are undergoing right now, do you cater to any kind of special insurance policy, which would safeguard in terms of their job loss or something? Sir, can you just elaborate more on that?
Right now we don't have any product like that, madam. But we have a policy. We have a policy where the loan amount is covered by the SBI life insurance policy. But it doesn't cover about the present situation. It covers only in any case of contingency. The bank will pay back the entire loan amount. The insurance company will pay back the entire loan amount to the bank, and the customer will be the spouse will not have any liability. For this COVID right now, we don't have any insurance on that, madam. And I want to add a few more interesting points the customer may like to know. Suppose presently many people may lose their job because of situation. We wish they should not, but sometimes it may happen. I heard from IT companies they are reducing salary also. So there will sudden reduction will be income will be there. So we have a product called top-up loan. Already I have a loan. Suppose I have a loan with State Bank of India. I partly paid back to the bank. So now I can even take a loan, what we call top-up loan, to my eligibility. Whatever the remaining money, I am original eligible. Whatever the money I pay to the bank or the value is still left to the bank, I can take back a loan to meet my contingency. I think the present situation where we are suffering from, most of us, we can think of the top-up loan.
Okay. In terms of processing a loan, how exclusive is SBI, sir, in terms of today's competitive world? We have banks who are doing door-to-door services. How do you stand out? What are the points which you concentrate or pay attention on in processing a home loan? How quick it is today?
Madam, it's the right question you ask now. State Bank of India has promised to pass a loan within 3 days. We have so many things, so many projects coming up in Chennai. Some of the projects are approved by State Bank. Not only State Bank, many other banks also would be called approved the project. We called approved projects. State Bank has promised to sanction the loan within 3 days. 78 hours will sanction for approved loans. We'll sanction within 78 hours. For other loans, we'll do within 7 days, madam.
That's interesting. That's very interesting. And more so ever, if the project is already under the approved list, I think it's even more quicker, I believe.
Even though I said 3 days, my record says it's only 1.7 days now.
Excellent. That's nice. Tell us about this mortgage formalities. In the recent times, it's become a mandate, process. So, what should one take care of, or what is that process involved in doing a mortgage?
You mean mortgaging after the sanction of loan? What do you mean by that?
Registering the documents. There's a mortgage process which goes on.
I can't get your question.
So, once they, during the registration, we see along with the UDS registration, there's a, MOD also being done.
You are telling about MOD.
Yes.
MOD, it is not it's a State Bank compulsion, but it's a government of Tamil Nadu compulsion.
Okay.
Because it under stamp duty, many of the states in the country they want to make MOD after once the loan is sanctioned by the financial institutions. That's why we do it. But it's not a big issue. What people are thinking of like that, madam. We have to fix an appointment with the district office for making a MOD, and our own people from State Bank of India will come over there. So it's only to make it that they borrowed from they bought from State Bank of India. There will be a record there in the books of the district office. It's not a mandate from State Bank. It's a mandate from the government of Tamil Nadu.
So today, being processes, during the lockdown, we see people not moving out of the place. There's been, restriction in moving around. Mm-hmm. So, is there any online procedures which, has it been implemented from SBI, sir?
Yes, madam. In fact, people can apply through our YONO product. Am I audible, madam?
Yes, sir. Yes, sir.
Yeah, madam. Actually, all the customers in the present COVID situation, they need not go out. They can apply through our YONO application. They can come through. They can apply through the YONO application, or even through our online system, they can apply to the loan. And I tell you, madam, State Bank of India has a different marketing entities. People do not even step out of the house. We have different marketing entities. They'll come to the house, take the form, take all the required documents. They'll take. They'll go to the processing center. They'll get the loan sanctioned. Only one time customer has to come to the bank only for making a documentation. It has become so simple. Customer has to visit only one time while getting loan and another time to getting back document. So need not even step out. A lot of agency approved by the bank to do all the help for the customers. And even as you said, they can do through online also.
Thank you so much for the information, sir. I think we have the audience raising a few questions here. And just before we get into the Q&A, I just have a question for Mr. Srinivasan. So we were talking about this, joint applicant benefits. So
Yes.
is there any restriction that, between the siblings, or, is there any restriction with respect to joint applicants or being a co-applicant?
Yeah. So there are two things. One is joint ownership and second one is joint application of loan. Are you talking about joint ownership or joint application of loan?
In joint ownership, as well as,
Right.
obviously they'll be going, if they both are working,
Right.
then they would probably go in for a
All
loan.
right. So if you look at the income tax law, there is actually no provision for joint ownership or joint application. It is by necessary implication after reading the provisions that we come to a conclusion that you can gain the maximum benefit if you go for a joint loan. Reason being, income tax law says whatever loan you have taken, if it is a self-occupied property, you can claim maximum of 2 lakhs. By necessary implication, which means if I have an interest of 4 lakh rupees, I cannot claim beyond 2 lakhs. Therefore, if I introduce one more person, he has 2 lakhs. So therefore, effectively, the entire concept of joint ownership or application, it comes through the interpretation, and there is no concept of joint ownership or application under income tax law. We as experts, after analyzing the provisions, suggest that this joint ownership or application could be the best possible tax savings mechanism. There's no restriction to answer your question.
Thank you so much. Yes, that gives us a clarity here. Like we were also discussing that, when a loan is taken from family members or friends, you said there is a difference in, deduction under the different sections.
True.
So it is not covered under ATC, is what you told.
True.
So it comes under section 24. So can one even claim the principal? No, I think it is only against the principal ATC. Section 24 is going to be on the interest paid.
Correct.
Right?
Correct.
So apart from that, if there is any repairs or renovations which is being done, is he still eligible to?
Right. So just to touch upon on that, the point of interest also, see what happens is generally banks do not finance 100% of the loan. So what happens is the remaining percentage of loan, generally we borrow from others. Unfortunately, we don't consider that as a loan at all. But income tax clearly says with respect to section 24, you can certainly claim deduction of interest as and when you borrow loan. It doesn't matter you borrow from SBI, or it doesn't matter if you borrow from your brother or sister. So therefore, the two scenarios can be there in case of this excess borrowing. One, banks do not finance 100%, or you are not even eligible for loan. You are not satisfying the eligibility criteria. You are a businessman, you are starting the business for the first time. So therefore, in those circumstances, people should necessarily consider the interest deduction under section 24. So with respect to repairs, etc., which will be done after the procurement of loan, there is a provision under the income tax law whereby you can claim a deduction up to 30,000 per annum as deduction under the income from house property head. So therefore, year on year repairs, if you have bills, necessary bills with you, you can certainly claim deduction. That deduction is restricted to 30,000.
That's great. Thank you. And I just have one more thing to ask you. In case of this moratorium which is being extended, does it have any impact on the deductions when one offers moratorium?
It will certainly have. So let us bifurcate this moratorium into two categories. One who have availed this, one who have not availed this. Ones who have not availed this, there is no issue at all. Provisions clearly say you can claim interest under section 24 and principal under section 80C. Supposing I have availed this moratorium, what can happen is with respect to 80C, I won't make any payment of interest for the month of February and March. Therefore, I cannot claim principal amount under 80C. However, as I said earlier, the deduction under section 24 is on interest payable and not interest paid. So when I look through many banks' terms and conditions with respect to moratorium, it is not a question of interest not being payable. It is only a postponement of the liability. So therefore, interest is very much payable. There is only a postponement of the interest liability. Therefore, according to me, you can still claim the interest under section 24, provided you obtain a certificate from the bank. Bank will give you a certificate saying this is the interest payable for this financial year. If you have it on your hand, absolutely no issues. Assessing officer or the department will verify only this interest certificate. That amount is there, you are very safe. You can claim certainly interest.
Thara, you're on mute. Thara, you're on mute.
Thank you so much for the info. And now we move on to the question and answer session. We have, we've been getting a very good response, and there's a lot of questions which is thrown away. So I'll just take one by one. Okay. I have 2 housing loans on 2 different properties. Can I get tax rebate under Section 80C of both the loans? I think Mr. Srinivasan can take this.
Yes. So if you look at Section 80C, it does not make any distinction between 1 property, 2 property, or 3 properties. It just says if your income is chargeable under the head income from house property, then you can claim deduction, which means unless and until you do not use your house property for your business purposes, if you are either using it for self-occupation purposes or for renting it out, you can absolutely claim deduction of principal under 80C for both the properties. There is no restriction at all.
Sorry, I lost you, sir.
So I was just explaining that there is no restriction with respect to number of house properties for which you can claim deduction under Section 80C, because 80C does not look to number of properties that you own. It only looks to the property which is taxable under the head income from house property. If you are using the house property for your own consumption purposes, or if you are letting it out, under both the scenarios, your income is taxable under house property. Therefore, as long as you are either letting it out or you are using it for your own purposes, for all the properties that you own, you can claim deduction under Section 80C.
I think that. Thank you for that. Clarification. Yes, please.
Yes, sir. You're audible, sir.
Yeah. No, I just explained. I hope.
Yes, your explanation was perfectly received. Thank you. Thara, again, over to you.
I think that addresses Mr. Akash's query. We have another query. It says, would like to know the amount of tax to be paid to TN government for registration and the tax benefit.
All right. So as I understand, it will be registration fee of 1% and stamp duty of 7% is what I remember. I'm not an expert in registration law, but probably I'll check and clarify on the registration.
It's 4% is what we are paying as stamp duty. Yes. It's 11% together.
Yeah.
Okay. What about NRE, the property is let out? I think I'm not able to understand this question. We'll move on to the next one. Do I get tax benefit on a balance transfer of loan?
No, balance transfer of loan. Yeah, so there is no specific provision for balance of transfer of loan. All the other provisions which we discussed will hold good, in the sense if you transfer loan from one bank to another, assuming there are 2 possibilities. One, your outflow in terms of interest will increase or decrease. Whatever interest that becomes payable, alone you will get deduction. There is no additional benefit on account of transfer. And in fact, just for information, if some banks charge some fee for transfer, that amount you cannot claim as deduction under either 80C or 24. Your interest which you are going to pay after transfer or the principal amount, yes, certainly you can claim. Separate benefit is not available for transfer.
Thank you. Sanjeev is again, I think he's got a question for us. Could you please tell the procedure for loan transfer from other bank to SBI? So Mr. Seenu Baskar can handle this question, I guess.
Madam, actually, I just add one more point what auditor was telling. In fact, bank they don't charge for the transfer of funds. We don't charge any charges are not there nowadays. RBI restrict that. There's no charges right now. They cannot claim IT benefit for that. Madam, now since there is a interest war between various banks, various banks give rates, different rates, depends upon the RBI repo rate. There's quite chances people transfer from one bank to other. It's quite possible, and it's also quite easy also. Now everybody plans for better interest rates, better lesser EMI. So there's a frequent change of accounts there. It is not so difficult. What they have to do, they have to get what are the documents with the earlier bank. Their account should be standard in the earlier bank accounts books. And third thing, and what is the bank statement for the past 6 years? If they give to the State Bank of India, we can thinking of it, take out of the loan, madam. It's not so difficult. We want to know what is the documents they are given to them, the list of documents and copies we want to go pass it through.
Thank you, sir.
And in fact, some banks ask for interim security. State Bank always waives interim security.
Good. We have another person. I'm not able to see his name. The question is, if I buy a house jointly with my wife, can I take a home loan only in my name without including my wife as a co-applicant for the loan? I think he's already. I think we touch based. But anyway, I'll throw this question to Mr. Seenu Baskar.
Madam, these are options like this. Whenever I can transfer a loan from one bank to other bank, I can leave any of the borrowers. Suppose there are two joint borrowers there, I can leave one borrower there when I transfer to the new bank. Similarly, I can even increase the loan and increase the tenure also. There is no fixed thing. The same tenure and same loan should be there in other bank. We can increase the tenure. We can increase that loan amount. We can leave one of the borrowers also will transfer from one bank to other bank.
So his question is, if I buy a house jointly with my wife, can I take a home loan only in my name? So he wants to know whether
it's a new loan, sir.
It's a new loan.
No, now I understand. Actually, the loan should be availed by two people because the property is in two names.
So a single person cannot take a loan, is what you're saying.
Either he can be co-borrower or the other person should be a co-borrower only.
Okay. Another question from Mr. Saina. Should I apply for a home loan with a public or a private bank? What is your thoughts, Mr. Seenu Baskar?
He also asked about the advantages of a PSU over a regular private bank or an NBFC.
Actually, people think that PSU banks take a lot of time in processing. In fact, now PSU banks have taken the pace and they are on par with the private bank. But I suggest the PSU bank because they are very transparent. There will not be any inbuilt charges. I don't have any enmity with the private banks, not at all. But as a person availing housing loan, I suggest them to go for a PSU because they are very transparent and they immediately pass on the benefits what they avail from the RBI. They immediately pass on to the borrower. So I suggest them to go only for a PSU.
Okay. I think this point we already touched base. Kindly clarified why banks have stopped fixed rate as they are going ahead with only floating. You said it has been withdrawn. We don't have that.
It is a bank policy which I'm not able to tell about.
Okay. We'll move on to the next question. Considering the present economy downwards, let us know whether housing loan interest will further drop. Can we wait and purchase? This is an interesting question.
It's a good question. As I started in my introduction, for the past 20 years, this is the lowest interest rate. In my opinion, the interest rate may not go down further. In fact, people know we have a very thin margin now between what we are renting to public and what we give to depositors. So I don't think rates will not go down further, madam.
And given that, again, from the production team, given that rates are linked to repo, it is even if interest rates drop, that is going to be passed on to the end consumer.
Yes, you are right. You are right. Even though I say that there may not be any interest reduction, if tomorrow the RBI reduces still more the repo rate, there is a bright chance that our rates will go down.
So I think that addresses the question. It is both a win-win situation, and the customer definitely will benefit even the rates goes down. So that's an interesting news. Whether the home loan insurance is mandatory, if yes, what are the pros and cons? I think we discussed about this, but then again, I would throw it to Mr. Seenu Baskar. I think you said that SBI, you don't have this option, right?
No, madam, actually there are two types of insurance are there. One is that we are doing the property insurance, and other is for the insurance of the person who has taken the loan. The life insurance for the person who availed the loan. In fact, the insuring the property is a mandatory. So there is no option for a customer regarding the insurance of the property. For house property, it's only optional. But in fact, I suggest them for a person for young people who are taking loan for 30 years. But it's only small lump sum. One time they have to pay. Even bank gives loan for that also. We can pay through EMI. So I suggest that to safeguard their interest and the interest of their offsprings also, we should go for an insurance. That's why I suggest.
Are you making it mandate, sir, or is it optional?
It's only optional.
Okay. We have Mr. Nathan, he's asked a question. Sir, I have a low credit score. Can I still apply for a home loan? I think this is again a very commonly asked question and a very, detailed question. And most of us would love to know, if the credit scores are less, would I be able to get a home loan? What are your thoughts about this, sir?
In fact, as of State Bank of India is concerned, there is no limit up to which we can give, or beyond that we cannot go. We don't have anything limit like that. For operating people, they have some kind of limitations beyond which they cannot go. But after getting approval from the higher authorities, even I don't think, madam, even people with 600 plus score also they got loan.
Oh, that's nice. So, is there any deviation or considering the past situations? Do you take any deviation from SBI to go out and give a process of home loan for that particular individual, sir?
What deviation required, madam? It is
in case the credit scores, the CIBIL scores are less, and based on the track record, do you take any kind of a deviation? Is what I wanted to know.
As I told you, very clearly, madam, we take deviation case to case. If there is some genuine things are there, suppose somebody has not gone for job for three months for the past 3 months, he will not get salary, he will not pay the EMI, so there will be some reduction of marks. Genuinely, we consider the case to case, we consider and take it, madam.
I think we'll quickly take another 3 or 4 questions here as we're running short of time. Can we claim property tax paid in a year under any section? I think Mr. Srinivasan can take this question.
Property tax paid, is it?
Yes.
Yes, there is a separate provision under income from house property where your property tax paid is certainly allowed as deduction, but that deduction will be of meaning only if you have income from house property. From that you have to deduct it, and then net tax received will be arrived at. So therefore, to answer the question, yes, you can reduce the property tax paid from your total income received from your house property when you let out.
Oh, that's nice. Okay, I think another question to you, Srinivasan. What about NRE for the tax rebate for the property is let out for residential purposes?
Right. So interestingly, generally there is a distinction between a resident taxpayer and a non-resident taxpayer under the other provisions. As far as income from house property is concerned, there is no such distinction, which means all the deductions as is available to a resident is very much applicable to a non-resident as well. So therefore, technically speaking, there is no distinction at all. ATC benefit as well as benefit is not discriminating between a resident and a non-resident. Non-resident can certainly claim all the benefits as is available to a resident.
I think we have touched most of the topics which are relevant for a home buyer. So is there anything else the speakers would like to finally touch upon so that we can wind up the session?
Madam, I want to make one point.
Yes, sir.
Now the government has extended the Prime Minister Awas Yojana for some more time. The subsidy people can claim off, and the interest rates are very cheaper now at present, and the availability of flats are more at a very affordable rate. I suggest it is right time for people to go for a housing loan.
Definitely, I think in our in our previous webinars also, we've been insisting why this is the right time to go in for a property purchase. And I think we've been addressing to all the key points in our webinar sessions, for the benefit of the individual to decide upon. So thank you so much for the lovely session. That brings us to the business end of this another very important knowledge transmission session of the Navin's webinar series. On behalf of all of us at Navin's and the esteemed audience, I profoundly thank the two speakers of the evening for taking their precious time and sharing their valuable thoughts with us. We will also publish the contact details of the speaker to the audience for any further assistance or clarification. You can see it in the comment box. Yes. I also thank the wonderful audience whose lively interaction achieved the purpose of this session. I also thank the Navin's management and the backbone team for successfully conducting these webinars. Until we meet to another enterprising episode, this is Thara signing off. Thank you and good night to all.
Thank you. Thank you.